Can hit the record. All right. Welcome everybody to Friday Night Lights. For those who are new, this is a call we run every Friday night, 7 p.m. Eastern. We run it for about an hour and a half. So we go from 7 to 8:30. We try to bring as much information and knowledge from ourselves to you guys. We also like to bring folks on to talk about different things. We've had debt people on. We've had people about property management. We had Jake on talking about raising capital. So each week we really try and bring a different aspect to you to just walk you through the full length of the deal and really dig into the bigger picture, to this more micro, and really get into the details so that you actually are fully informed when you start doing this stuff. We also have our own stuff. We have our own deals that we walk through, and we'll walk through some of those too. Um, One of the properties that we previously had was the St. Louis property that we're almost going to close. We're just waiting for the loan part. So we've actually walked folks through that. We spent about 8 weeks kind of walking through the process every week and learning what we learned during that process. Um, what I do like to caveat all of this is a learning experience. We are not financial advisors. We are not tax accountants. We are not SEC lawyers. So all the information here is for educational purposes only. You guys should always do your due diligence on anything that comes up. I'm really excited today, though. So every once in a while, what we try to do is we try to do kind of a bring your deal grant style, right? It's not as we'll be nice, right? We're not going to be mean to you. But we do a bring your deal style where we allow you guys to bring stuff that maybe you're looking at. Maybe you're the very beginning and you want some feedback. Is this a good deal? Is this not a good deal? Maybe you're in the middle. Maybe you're capital raising. Maybe you just need a couple $100,000 to close the deal. Whatever the case may be, we allow, you guys to bring that here, pitch it in front of these folks. What I'll ask everybody on the call, feel free to give feedback. If you see something, how it's pitched, if you're seeing something about the numbers, if you have a question, pretend to be an investor, or maybe you are an investor and you're interested. And so really dig in. People are here to learn. So, and be nice, right? So, we have three folks to pitch today. Stephen and Elaine are up first. They have a deal from New Jersey. I will let you guys kind of pull that deal up, walk us through. I figure we have about 20 minutes or so to go through your deal, ask questions before we move on to the next one.
All right, thank you, Jason. Hi, everyone. My name is Steve Throp, and my partner Elaine and I work on this property in Bloomfield, New Jersey. Is that okay if I share my screen, Jason?
Absolutely. Bring your stuff up.
All right, yeah. So here it is. 88 Monroe Place in Bloomfield, New Jersey. It's a property in the suburbs of Newark, New Jersey, and where our offer price is 6.6, a little over 6.6. There's 38 units. It's built in 1927, owned since the inception of this building by the same family. They're just selling it because they want to invest in other properties. They've been meticulously taking care of this property by themselves, managing it by themselves, mom and pop style. And they have a supervisor that lives in the property itself. This is a value add strategy. And Yeah, so we'll go into it. Just to introduce the team again, my name is Steve Throp, and my partners Elaine Yee and Matthew Tifke. He's a KP, and we're GPing it, co-GPing it together. And we are currently looking for investors. We sent the LOI last week. We are being presented in front of the seller this weekend into the early next week, and we should be getting walkthrough schedules next week. So we are strictly looking for investors, LPs, for capital raising. All right, this is a summary of it. Told you a little bit about it. The biggest things is how that it's a value add. The rent to market gap is average 32% below market value. There is a rent control, and I'll talk a little bit about that later. It's not bad. Some people look at the rent controls in New Jersey and other states like New Jersey. They're like, oh, wow, it shouldn't, but it's actually not bad. And I stress tested this underwriting, stress tested it with, various things in the underwriting, like property management and LTV, LTV, and also the occupancy rate. So here's some numbers on the right. The LP target is 15% on fifth 5-year hold. We're going in at 6%. Like I said, offer price is right there. Stabilized, the 5 year is 9.2% stabilized cap. The equity multiplier is a or 2 times, 2x. And just really quick to add the 32, 38 units, there's actually 40 total units, but this is all just based upon what is actually being lived in by tenants is the 38 units. The 41, 40, the 39, 40, 40th unit is one is the supervisor lives in it in lieu of his services, and the other one's used as a small storage room for the tenants to put like, bikes and whatever in there. But we intend to take advantage of one of those spots and putting an actual property management company taking care of it on a daily basis, and use that one room as a laundromat and so on and so forth. Okay, property overview, Essex County, New Jersey. Already know that. This is the unit mix. There's 27 1 bed, 1 baths, 10 2 bed, 1 baths, and one 3 bed, 1 bath. Well, yeah, the instant cash flow and the income per month as of right now, real time is a little over $60,000. That's after the NOI. NOI is 423,000. And then the upside is 32%. Like I said, that's the median market gap. And after we meet that, would be that and higher. These are based on very conservative numbers that we use underwriting, by the way, just to reiterate that. Okay, the financial summary, talked a little bit about that. For the investors on the left side, we're doing a 70-30 split. We're looking to cap raise a little over 2.6. It shouldn't be that difficult to do. And these on the right is the pro forma, what we're expecting. And D12 is what we're looking at right now. Like I said, NOI is 423. And we're hoping to reach 654. And the exit cap is a little over 6.75. So this is the big thing what people always ask about in New Jersey rentals, especially me with the rent control. Yes, there's a cap increase on your rents. However, they're capped at 5, but you can also talk to the board and request higher if you have any major capex being done, like a new roof or a full renovation. Like I said, like the laundromat room on the bottom floor, turning that over into that. That's a major capex improvement. So I can talk to the board and get that approved for a higher increase. However, just last year from 2024 to 2025, the owner added window covers to all 38 unit window, all the windows of 38 units. And every single tenant re-upped on their lease this year after it was like $120 increase per unit. So, what we're going to do is exactly that, but more. And we're going to make them very happy. And they already are. They're very loyal tenants from what I see for the records of the leases. I have lease records up to 3 years. And on the bottom right of this, you can see our max offer price. So we're not planning on going over 7 million or 7.2. But even with that conservative max offer, we're still profitable. We're still cash flowing at a good rate. Our IRR is still, let's see if I can move this for you. Yeah, here we go. Over here. So you can see the numbers on our max offer. We're offering significantly less than that. But if we do decide to do that after through our due diligence period or before our due diligence period with negotiating deals and counter offers from the seller, which should be happening next week. If we as a partnership, as a team, decide to do that, we will, because we're still in good numbers. And that's at a 15% to the approximate 6 unit turnover rate per year. These are the projected returns. You can see in green on the bottom of these big blue blocks, big squares here. These are what our targets are, and we're hitting them and well above them in this property in our plan. So, I mean, I don't really have to go through all those because I kind of mentioned all of them, but you can see these big numbers of what it's going to be. So it's a very profitable, very good opportunity for people, for investors, especially. Um, Especially since if we're going in, say 7 million, and 5 years later, at 5 years, it can be almost 10 mil. So with that's huge. We can either decide to refinance it and then or we can keep it or we can sell it and still make money either way. So our doors are wide open with this plan and performa. And this is a 5 year plan, like I said. Cash on cash up here, projected cash on cash for investors and us. The multiplier you can see right here, DSCR, we're starting already above the 1.25 rule that we're trying to follow the best we can. And these are the proceeds and the exit sale, what we're guessing. Market overview. I've already mentioned a few of these. The median housing income is a little over 75,000. That's pretty damn good, and if the growth is positive, and I'll give you a little insight if you don't know New Jersey and the area of which this is in Bloomfield, Essex County. New York City is almost impossible to live in for new families like 30 years old, people getting out of college and stuff like that. So what they're doing is they're coming over the Hudson River and they are buying and they're renting apartments. And most people, like college students, post-college students, they're looking for places to live so they can find jobs in this area because you got businesses all over in New Jersey. You got the Prudential Center, you got the MetLife, you got all the corporate buildings in the area there. That are very likable by these young people looking for these places or old people if they're looking for a house and they can't afford their house or they sell their house, but it's very commuter friendly area. The area, so this particular building is like 2 miles away from the Garden State Parkway. Garden State Parkway, if you don't know, is like I-80, but it's I-80 strictly for New Jersey. It goes from northern New Jersey all the way down to Cape May, and it's literally an express lane to through the whole state, and it also goes to the Turnpike, which goes and connects to the bridges, George Washington Bridge, Lincoln Tunnel, Hudson Tunnel. Um, so it's very commuter friendly. It's very likable, this area. Also, more about it, you can see this little blue block here. It pretty much goes over what I was just telling you. Commuter friendly. NJ Transit's only actually 11-minute walk to from like the rail station is from 11-minute walk from the building itself. Also, there's four colleges within a 10-mile radius there. There's two within a 15-minute drive. Montclair State University and TCNJ, very popular, highly recognizable schools in this country, right around this area. So it's a very, very, very renter happy area for these students and graduates and their families. So some highlights here. You can look at it. I already pressed one over all of it. The average market, rent to market gap, they're renting 32% average below the market. Organic upside through the vacancy decontrol, which is in the rent control laws in this town in Bloomfield. So people can't leave. They don't leave unless they want to leave, really. And if they decide not to leave, um, we would deal with that, but they haven't had problems with it. The same family's owned it for almost 100 years, and for a family, one person to own one business for this long, they're obviously cash flowing, and they're obviously not having too big of a problem to run this business successfully. So not worried about that. Like I said, conservative. We use a conservative 60% LTV and 1.48 DSCR at year one. It could be much greater than that when we get our rates back from the lender, which I think we'll get a much higher LTV for it. And all the returns are met. They're exceeding what our targets are. So far and beyond. So these are very healthy numbers for savvy investors. that want to put their money somewhere safe where they know it's going to add value. New Jersey, suburbs of New Jersey are renter's paradise. People are always coming, even when people are moving down to South Carolina, North Carolina, Florida. New York City is much bigger, and people are leaving it like crazy. And what they're doing first, before they do any big move, they're moving to these rental properties and these multifamily properties right over the river and pay half the price. So as of right now, from what I've seen, just by walking around the building and inside the building, there's no renovation capex required on a max level. They take very good meticulous care of this building. They have for years. The tenants that I've talked to, they have been nothing but they've been happy about it. You know, so that's really big to know. But we also added capex in our underwriting with those numbers. So and the NJ Transit, it's huge. So yeah, the bottom line. Um, you can read it for yourself. I mean, between our offer price and our max offer, we're still profiting in cash flow on day one. So and it's 5 year hold, and we can do anything with this. 5 years from now, we're gonna make you know seven. We can make $7 million after the debt pay down, refinance it for close to 10 million, take 7 mil and 1031 it, and or whatever we get 1031 it, or we can refinance and keep it in 1031 and just keep making cash flow here. It's a good property. It's a very profitable property, and we're really excited about it. So just a little couple pictures of the existing rooms. These are the pictures that we took, and they're really good. It's an old building, but like I said, they're meticulously taken care of for years and years. They really care about it. This is like their baby. So but they have five other buildings, so they're selling one by one. They're kind of done. They want to go bigger. So I'll let Elaine take over.
Questions?
If anyone has
Yeah.
questions.
So, couple questions. I'm a little confused on the returns. So, in the beginning, you had a set of returns. You had a DCIR that was, I think, 1.85, but then when you got towards the bottom, the DCR changed to 1.4 or 1.43, and your returns are higher. I'm just trying to figure out, like, what are your projected returns, and what's the difference between what we saw up top and what's down below? So, like,
Well,
if you go all the way to the top, right? So, yeah, go back to that page, that one right there. So you have a 15%. What's the difference between that 2x multiple? Is this what you're looking to purchase? That's like your buy box, or is this what this is?
that's what this is. This is the stabilized cap is an average is what our the pro forma of our 5 year plan. So like by year three, year
Mhm.
four, like at the peak, this is what we're projecting it to be. And at the peak, the average of all the IRR for the entire 5 year hold, this is what we're expecting to stay at. We're not expecting to go lower. We're not expecting to go we don't want to, this is 15% plus, so we're not
Okay.
expecting to go any lower than that from
So then
when
if you go down to your bottom, then you talk about a 22 right here, a 22.6% IRR. What's the difference?
So the 22% is what we're projecting with our plans, when we do renovations. And the more so that's what it is with the numbers now and what our projected numbers with the original with our numbers, but with what our plans are with the additions, like a laundromat, and the extra income per month. This is like a total of like of all the investors. This is what the
So
high
so
total
that's your
is.
ret yeah, that's your re So that is
Projected
your
what the cap,
projected re got you. So that's your
right.
projected
Hmm.
return to the investors. So then the
Yes.
one up top is really your buy box, right? In
Yes.
theory.
Yes. Yes.
Should
It's
probably
like a minimal,
what
right?
you're looking for, right? You should probably clarify that or just
Okay.
remove that slide because
Okay.
I wasn't
You-
sure. I'm like, am I getting 15? Am I getting 22? Am I getting
Okay.
2.45 or am I getting 2? I think your cash on cash up top was lower than 10. Your target is 7. Um, it's just the flow. I was like,
Mhm.
okay, well, I'm getting 15%. Well, wait, no, I'm getting 22. I just wasn't sure what my returns were.
Okay.
well, and you just said something about renovations, but then you said your CapEx budget was, you didn't have any CapEx. So how do those two things line up?
Um, we we didn't the capex that we didn't add any 'cause when we originally underwrote when we underwrote it the first time, there was no reason to add capex to it. But once we started talking, getting deeper into it, and when we were making this slideshow, we were figuring the with other additions like a laundromat and how much money it could possibly increase our returns. It was kind of just like an estimated like it was like an estimated like projection based upon our plans. We didn't add into the current, so the capex that we used was based upon what it is now. And the when I'm talking about the renovations and these bigger numbers are for what we're projecting to be at the end of this term or throughout the this term.
You should probably just clarify that because,
Yeah, yeah, I got
you
it.
know, because down
But
below, you like Tim said, down below you show CapEx is 0.
Mhm.
yeah, when you say renovations, that means usually there's CapEx. So those two things, you can't
Okay.
have zero CapEx and do renovations. It has to
Okay.
be one way or the other. And just to
Yes,
Got it.
clarify that,
as an investor, I'm thinking, okay, you're doing renovations, but how are you going to pay for that? And I don't see like a capital stack. Like where is my money going, right? As an investor, oh, is it going to go towards renovations? Oh, maybe not. So definitely you need to have like a sources and uses type thing in here so that I know as an investor where my money is going.
yeah, keep in mind the idea every dollar has a job. And so you need to tell us which dollars are going to what job. Is it, so there's a portion that's going to the purchase, which would be like the down payment and the closing cost. Then there's a portion, if you're going to have renovations, that would go to CapEx. So you want to line that out. And then any other, what would be the other, what am I missing? Um, Closing cost, purchase price, and CapEx are usually the main uses of the
Acquisition,
Acquisition.
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 Yeah.
Okay.
So that basically every dollar, as far as your equity that you're raising, is accounted for, so that people know, where that's all going.
Okay. I really appreciate the
Yeah,
input. Thank you so much.
that was great feedback. Thank you.
I do
The
have
other
several other questions, Stephen, but I know we're out of time. So if it's okay with you guys, I will just email them to you. They're just things that, I'd like to have answered as potential investor. And
Yeah,
so I'll email those. And if you don't even need to reply to me, it's just so that I want you to know this is something you need to think about.
of course. No, I would do it. I'll definitely love that. Thank you so much.
And
Mhm.
just
and
a real quick question before you get away. So, did you, as far as the financials go, did you use a T12 and a rent roll, and did you compare, their OM numbers and all that to those financial documents? Did you use those financial documents in the underwriting?
Yes.
Okay,
Yes, I
and
did,
there
and,
were,
and they were exactly right. Like when I looked at the OM financials slide that was on there, and then I looked at the rent roll and then the T12 that we received, they matched up, and I added them all up. I wrote them all down, and added them all up, and did it by hand by
yeah.
hand, and then I did it on the calculator. So I did that due diligence part of it.
So, I ran a CoStar report, underwriting report on this. I'll send that to you if you give us yeah, I think we got your email. So I'll send that to you too, and it's got a lot of data you can compare to what you already used. If you don't already, you don't already have one, do you?
No.
Okay, I'll send that to you.
Thank you, Tim. I really appreciate it. And Teresa, thank you so much. And
Mhm.
Jason, thank you.
So, yeah, one more for the group. Is there anybody in the group that has a question for them before we jump to the next?
I'm just a little confused, Stephen and Elaine, about it's a 1927 property, right? This is a vintage property.
Mhm.
Yes.
So I'm curious why initially you were thinking there would be no need for a CapEx account.
That, that's because they've been meticulously cared for throughout the years. So, I mean, if you look at the pictures of the apartments, they
Hmm.
have the original parquet floors, but they're like pristine, right? So I believe they did some upgrades to the apartments beforehand, right, Steve? On some of them, but it's it's been taken care of throughout the years, maintained. It's very well maintained. We haven't walked the property exactly yet, like so we haven't seen the systems and whatnot. But um, we will probably have more intel on that once we do that.
I would
Okay.
I would
Yeah,
highly
'cause
recommend.
initially plumbing and electrical would be my big concerns
Yeah.
for whether those have been upgraded over the years.
I would highly recommend trying to get a tour of the property before you put an offer on the next one, just so you kind of know some real basics, like what Laura just brought up, just to see if there's any potential issues like that. So you can kind of factor in that in the beginning.
Okay, yeah. I mean, I've driven there. I just drove by there today. And I got out, I watched them walk out. I didn't get to talk to Elaine about this yet because I literally just got home, just took a shower and got on here. So, but I talked to one tenant and I walked into the main room and I looked around and I walked around the building, drove around the building, and it looked exactly how it was described to be. But I can't take what I heard, like you're explaining, Tim and
Yeah.
Laura. I understand that from a construction background, and I'm looking forward to doing that. I asked them if we could do a walkthrough. We can like before the seller receives these offers, and he says we have to wait until all the offers are collected, and so we're just gonna see, and we're going to hope for the best. And if these numbers are these numbers, and if I have to add a capex, I will add a capex. And um, I've stress tested other numbers already, but if it's the worst case scenario, we walk away. But I mean, if it is what I think it is, what we think and believe it is, it's even though it's BS, what you believe and what's real is it doesn't matter. But um, we'll walk away or we make a lot of money on it. So we'll see what happens.
We got one
I'd
question
like,
here.
Oh yeah.
Hi there, Steve. Hi there,
Yeah.
everyone. Forgive me, I'm
Okay.
driving right now, but I just wanted to tell you this is such a beautiful property. I like just a few things that kind of stand out for me that are different than other assets that I've seen in New Jersey. So I love that these are the original owners and they've taken such great care of the property. And I love, Stephen, that you know the lay of the land really well and that you know this neighborhood so intimately. And I think that's going to give you a big leg up when you guys, I know this is a practice run for, presenting the deal. I just want to tell you, you did a really great job. But I think that's going to be really great when you let people know when, you're really going to play ball and showcase this asset that you know this area really, really well. And that you're just a few minutes away and that you have history here. So, as an investor, as an LP on other deals, that's a must. So I just want to tell you that this is a really great property.
Well, thanks, Lee. I appreciate your comments. Thank you.
Kenton, right? You have a question?
Yeah. First of all, thanks, Jason, for having me on. I mean, I was on last week
Yeah.
for the first time when Jake was on. I'm in their community, and I really liked I really like the groups that I'm a part of. But and I'm a student of the game too, Stephen. One of the questions that I have, and when I would see that again, I'm new, I'm green, but when I see that kind of lift on rents with no capex, there's there would be a red flag on that. I think, how you going to achieve those rents or why is their rent so low? And now I had a property that I underwrote, and the reason why they were so low because they didn't need to go any higher for their investors, and they were just trying to ride it out for one more year to keep heads in the beds. But that would be a big question for me is to how you're going to get that big bump without the capex, especially in
Right.
the two bedrooms. I mean, the three bedrooms, I don't think there's a big bump, but there was a huge bump, especially if this is a fully renovated property. If you can get that bump, why haven't they got it? Or is it just because they're capped at the increase?
Well, well, I think when I spoke to the broker multiple times about it, because like you said, I'm green, and also but when I asked him that like similar question about the tenants and like why the rent's so low, this that, it's because this family just has these loyal tenants and they are just going up a little bit by a little bit. Like they just did window covers and they added $120 on rents last year from 2024 to 2025. I just think they're a very elderly family that has been doing this a long time, and they're old school, and but they take care of their things. They're one of those old people that just continue to take care and do what they know, but they're avoiding the nuances of the new generation of how things can be. So that's my take on that.
Yeah, I definitely would have that story in there because I get investors wanting to know questions of 15% bump. And it was like, it's 15%, but I've had that question come up. And when you're getting over 20% markup on rent with no capex, it might be a question might come up.
Okay. Thank you,
Anyway,
Ken.
thanks, Jason. Appreciate you letting me on.
So,
Absolutely.
so Stephen, I've got a bunch of questions too, like Teresa does. I don't want to take them up here, but I'd be glad to meet with you sometime and kind of
Yeah,
go over them. So,
yeah, I would love that. I take anything I can learn. Like that's why I did this. That's why Elaine and I chose to do this. When Jason posted this, I said, "Yeah, I got a deal. I'll do it." I talked to Matt, and he said, "Yeah, there's no reason you shouldn't do it." And I was like, "Because I was in the army. I was a sergeant. I was a leader. And I know how daunting new tasks can be and new things can be. But the only way to do it is to jump in. And the best teacher is constructive criticism and asking others for help. I can't receive what I don't give away. So I really appreciate that, Tim, and I look forward to talking with you, meeting with you on
yeah,
this.
I just put my phone number on my picture profile. So if you want to give me a call, we can get together.
Okay.
Awesome. Awesome. Well, this truly was. You did a fantastic job. Look, you're learning. Teresa's going to send you some questions. Tim will work with you. He can really help you dial in some of this underwriting. Just a couple things on your pitch. Just hone in your plan. You were kind of like, maybe we do this, maybe we do that, maybe we do this. Like, I'm not investing in something that's maybe.
Yeah.
This is what I'm doing. And if
Okay.
the market is different, this is what I'm doing. Like, be solid. Be like, you got this. This is a good deal. You love this deal. Make me believe you love this deal. Like, why do you love this deal? Don't kind of be wishy-washy. Like, maybe I'll do this. Maybe we'll all make a lot of money. People aren't investing in making a lot of money anymore. People are investing in you. And so they want to just see that confident part of you. And you definitely have it. It's just kind of dialing it in. So great job.
Thank you, Jason. Thank you, everyone. I appreciate it.
All right,
Thank
Alan,
you.
I think you are up next.
How do I stop sharing?
I think you just hit stop share, right? Down the bottom.
Yeah, you should have a stop share button.
And then Raina and Alan, you guys are on, right? see you. There you go.
Hey,
All right. Hello.
hey guys, how are you?
Good.
Good to be a part of this. We had a video this morning, but at 3, and we weren't able to tell our deal, but we're very, very excited about it. Me and my wife have been working really hard on it. It is 204 units. The rent right now is very low. Where we're at, we're in Raleigh, North Carolina, is where the deal is. The rent is only $1,013 a month. The NOI on it is 1.2 million. We're really excited about it because the rent has been raising forever. I mean, we've done research on it. It's very low for the area. Within the first 2 years, I mean, within the first year, we can easily with CapEx. I mean, we're going to have to. We got about $500,000 in that we're trying to get, or that we can receive for the CapEx to be able to do the maintenance to the properties. We own a business. We got about 15 guys that will go up there with us, and normally it would take about $6,000 to renovate, or to get each room going or how it needs to be. But we could probably do it for half, which is really great. And just by raising the rent to $100 per the units, we'll probably raise $500,000 each. By raising the rent in the first year, probably $500,000.
Is this the? Sorry, not to cut you off. This is the property, right?
That's correct. Yep.
Okay.
That is correct.
I just want people to see what you guys have here.
I appreciate you. Thank you so much.
Mm-hmm.
Yeah, it's West Grove there in Raleigh. It needs a little bit of work, but that's what we do. I love that about it. This is our first deal. We went to the Cardone Summit, learned a lot, and we have been nonstop ever since. We got another deal in Leesburg. Leland, that we're also looking at too, but this is the main one that I wanted to see if we can get investors on. We already did get our technically approved for the loan for 12. So the deal is 18 million. We got approved for the loan for 12.4. We are trying to raise 6.7 million. We went to the property. We actually walked the property. We saw that it needed a little bit of work. I mean, the workout room needs a little bit, but that's our specialty. So we're kind of like in love with it. Also, the OM on the property is great. For one, it's in between 2 college campuses. They're building brand new units. If you can see in the background on the picture, brand new apartment complexes right next door. So there's 2 things that are really good about this deal. There's a cell tower from Spectrum on top of the place that makes us $50,000 every single year. It's a cell tower that they use. So no matter what, it's already in contract, $50,000. There's also a parking lot off to the left-hand side of the building. That parking lot also, the one a little bit over to the left of the top picture, it is leased out for another additional $50,000. So right off the bat, you got $100,000 in profits coming in. Sorry, the actual income coming in. Laundry is also, I'm sorry. 22,000. Laundry on the property is also 22,000. So whenever we ran our numbers, the other income, coming into the property is right at almost $200,000 right off the bat. They also have, yes, the property, the parking lot has had multiple offers for $2 million. They want to say, but the property owners at this time did not want to sell that parking lot. They like the $50,000 revenue every single year, and I don't blame them. But that is an option for the investors to be able to jump into something and immediately have offers for $2 million for a parking lot is great. We have our KP in our debt quote already lined up. We'll have that Monday. Let's see. We already did our underwriting. Let's see. Yeah, we're just in the process of trying to raise the other 6.7. Yeah, the OM on the rent row, the data sheets, the location is great. Let's see. Yeah, it's a 1/4 of a mile from NC State. Yeah, so I mean the property is great. There's the 2.5 acres right there. If you can see the access land. It is on 8 acres of land. Let's see, any of my other notes. With our first year, we've been talking to some coaches, and we project in the first year that we can give our lenders or investors, 7 to 9% return. That's how much right now that I know that we can push back out to our investors. Cash on cash. The cash on cash is $455K a year. That's cash on cash that will go back to the investors for the first year immediately, and then probably everyone after. They have an HOA, which is we are buying out as soon as we take over the property, and that HOA makes an extra $500,000 a year that they're pumping from the renters into this HOA every single year. So if you jump into the property, you're looking at close to about $700,000 right off the bat every single year, not including the rent. And the rent after our NOI, and we did it at 50% of the NOI of expenses, which is kind of up there, but that's kind of what we wanted to do because of the remodel and everything that we got to do. But that puts the NOI at 1.2 million. So that right there alone, after the 50% expense, to have 1.2 is going to be pretty good for all the investors. Plus, after you fixing up, raising the rent, I project this property in maybe 5 to 10 years to go up at least, I would say 18. We're buying it for 18 million, probably at least 5 million in the first 5, and then hopefully another 5 million in 10, just by the renovations and raising the rent at where it's at. If you can see in the property picture there where it says the access land, right behind it is the brand new apartments that they're putting there. The rent starting on those brand new properties, from what I've seen, I think is $1,500 to $1,700, and we're only at 1,000. So that's basically all that I got. Sorry if I was talking too fast. We're kind of excited about it. We're just at the point to where we just got the offer from the bank today that they were going to pay 12.4 million on the property. We're getting our KP. We're excited about everything. So anything that you guys can think of that would help us move a little bit forward, or any advice, we're open to it 100%.
So, first question I would have is you should probably put together some sort of pitch deck. It is a lot easier to follow
Yes,
you if
absolutely.
I could see it,
I
because
agree.
I'm trying to follow all of your numbers,
Okay.
and I'm like, I'm
Yeah,
we're
we're
a
new.
little piece, right? Yeah.
Yeah, I need to put it,
So,
like I was telling her. She was like, "How are they doing that on the last one?" I was like, "I think it's a template, and then they put everything in so we're learning that.
we can share a template with you. You could
Please,
use
yes,
there's websites like Gamma that could produce them for you, but absolutely we could help you out there.
thank you so
Um, so 204 units, eight
much.
What's
Yes,
the
acres.
what's the occupancy?
Yeah.
92% right now.
Okay.
So there are 16 units that are not rented out right now.
Did you verify that with the rent roll, Alan? Because I looked at the rent roll pretty closely. There seem to be more vacancies than that, and I know some of them were spoken for.
Yes.
But that's just one thing, whether you looked at it or not, it's just something that, you never want to take people's
Right.
word for what they say. Count the number of units, make sure that it really is what they say.
Yes,
There were about 6 or 8 tenants that were 5,000 plus in arrears. They owed that much extra money. So that's a concern.
okay.
There was also one name listed with 26 units attached to it. I'm sure you know what that is.
I do.
Just things that I looked at the rent roll and, went, okay, those are some questions to ask.
Yeah, so the 26 units, there's 6 units and there's 4 units. Those are the 36 or 34 units that we are actually buying out. So it's with the 18 million, there's 170 units, and we're buying out the other 26, 6 and 4, I believe that it is. So that we are, as soon as we close on the deal, those units become ours to make it the 204 units.
So in essence, there's 2 owners to the property and you're buying them both.
Yeah,
I
that
see.
is correct.
Okay.
Yes, ma'am. And so we went to the property and we spoke with the manager and the leasing manager. And at that point, they were already evicting the ones like that. Some of them have already been out. So I do need to get I'll talk to the broker and get a little bit more of an updated uh, one, because the one you're seeing, I have it here too as well. And then the updated one, I have it in an email. I didn't, but it showed that the people that they had already leased to brought it up to 92%. So I
Okay.
do have to get that updated one. Yeah, yes,
Okay.
because
Yeah, because
I
I know
have,
that was from March, I believe, what I was looking at.
yeah,
And then you do want to pay attention to economic vacancy as well, right? Because really, with the economic vacancy thrown in, your occupancy was really 85%. So those
and
are
it,
just things that you know want to ask about, and a lot of that had to do with the loss to lease. A lot of like I said, there were probably 8 people that were $5,000 plus. One guy was 7,500 late, or 8,000. So he hadn't been paying rent for over 8 months. My question, okay, why is he still there? I mean, those are just things that you want to ask, right? I mean, you want to know that. And when you get into due diligence, you can, ask more of that kind of stuff. But those are definitely red flags that I saw right away that I would want to know the answers to.
and I appreciate you bringing that up, because that's one of the main reasons why we went there and spoke. The new manager, had been there for I think 3 months, and he was knocking doors. I mean, knocking them out. He was basically restructuring it because of his job, and I was like, I spoke to him, and he was like, "This is what we do. I'm not going to let anybody go over, a month and a half. We're not doing that anymore." So at that point, he was already getting them out and bringing new in. So whenever we left, I got all the paperwork, because he showed me a sheet, and I spoke with the leasing manager, and he showed me that the occupancy as of that time was the 92%. And I had
Great.
to show that updated. That I know on that paper, I was like, no, but that's the reason why we went. We wanted to know what was going on, so we made the trip.
Sure.
Thank you for that too. Yeah, that raised red flags with us too before, because we saw this after the Cardone uh, summit. So it had been like right after that. I saw that, and this is how long we've been working on it. So
For sure. Do you live there in North Carolina?
yes, ma'am. We live right here on the Crystal Coast, right by Emerald Island, Atlanta Beach. So that's a good reason why we wanted that property, because I can bring my whole crew up there and just turn that whole entire property into something very nice.
So
And
one
I
of
know,
your selling points can be that you have a construction company and you can
yes,
do the renovations, which means you can do them at cost. So you
yes,
should talk to that because that's a positive.
yes, sir.
Because if someone comes in and they use a external vendor, they're going to pay the vendor prices that
Yeah,
you exactly. So
yep,
you do it. I mean, you do the construction. You jack the prices up, right? Like so, it's 50%
absolutely.
markup. You have expenses here at 50%. Is that just a number, or is that actually what they're calculated at?
Their number said it was 49. I don't believe it. There's a little bit of waste to go in there. Their management that they have
Mhm.
there is spending way too much. I think it was like right at $200,000. I'm like, so you only got one manager and one leasing agent. That's the only two people in the building. Even if they were making, yeah, there's too much going on with the maintenance. First thing we
Yeah.
would do, me and my wife are in maintenance. That's got to go now. We would keep the manager that's there. He's a great guy. He's got it under control. But we would restructure it. I mean, that's our job, to go into a building and make it better and find all that loose spending and turn it back into our investors.
So would you property manage it too?
Absolutely, yeah. This is
So
our
that's
first.
another selling point that you should talk about too, that you would not only property manage it and assume you can property management at a lower cost than if you vendored that out, right?
That, and also the maintenance. I mean, the maintenance was like 87,000. They only have one maintenance guy, one person. That's it. And I know he's not making 87,000. So I'm like, and the reviews on what he was doing, my wife has done a lot of research on this. There was just bad reviews on it. He wasn't doing his job. He wasn't doing it timely. And one person on 204 units, I get it, but I do
Right.
this every day. There's something off there, and the numbers are way spiked. So I see a lot of return back to the investors. That's why I can honestly say 7 to 9% the first year, because there's so much waste there.
Alan, I,
So,
I took that number to mean that that was the repairs and maintenance cost, not his payroll. Like I feel
Yeah.
the maintenance guy's payroll would be in payroll. I feel like that's repairs and maintenance. So that's to, the gutters that had to be repaired or the siding or the painting or, a turnover of a unit. That's what I took that number to be, but maybe you know more than I do. I'm just saying generally. Tim, would you?
So, yeah,
Yeah,
well,
that's
yeah,
typically, did you get the number off of the T12, the financial?
I did.
Yeah.
I actually got it off the T12, and we also,
Yeah.
whenever we were there, we got the actual the numbers because they're a
Yeah.
little different from the T12.
So on a T12, when it says repairs and maintenance, that's usually the actual cost for, the whatever the materials and whatever work that they had to do on that. The actual cost of the employee is usually listed under the payroll section of the T12.
Yes, sir.
So
I
two
just
two
say
different.
from what the manager was saying that there was not that much spending on the maintenance. Like that money was going somewhere else. So that's why we would restructure it. I mean, yeah.
Yeah. Sometimes owners do hide money there,
Yes, ma'am.
Yeah.
Yeah.
as a
And we
takeout.
saw that. Me and her saw that. And I'm like, I do this. Like, there's stuff that I can see right off the bat. I'm like, no, that needs to be fixed so that whoever invests in us, they're going to get the better, the best out of it, not the people that are pocketing their money or pocketing their pockets, padding their pockets. Excuse me.
So, Joe, I see you have your hand raised. You have a question.
Yeah, sorry, I'm on my phone, so I may have missed this, but it looked like the building was a pretty tall building. Is there an elevator in the building?
There is. Yes, sir.
And what's your experience? I know, so I understand you've got a team. Are you guys experts in fixing elevators? Because that's one thing that scares me. Because one visit to fix an elevator can cost you 10 grand and it can turn your deal upside down. So curious about your experience with that and if you guys have looked into that being maybe one of the cost drivers for this project.
We do. I have vendors here, and I haven't had to use a elevator person in a while. It's been a while, but the homes here, all of them have elevators, and the vendors that I was using were still pretty close, but we haven't used them in a while. Just being honest. And whenever we did go to the properties and got onto the elevators, everything it seems to be like up to date, up to par. It wasn't like a cranky. Oh my God, I don't want to be in this. It seems like something has been done, within maybe 10 years. Not quoting me, I don't know. I'm just saying it didn't look like a problem. But if it
Yeah.
did, yes, then I could understand. Yep.
What
And
I
maybe,
would recommend on your elevator maintenance, you can
Yes,
do
sir.
a contract with an elevator maintenance company,
Yes, sir.
and it's an annual fee. You basically pay them regardless of what they do.
Okay.
But usually you can get those annual contracts. How many elevator are there in the building? Is there just
I
the one?
believe there's two.
There's two. So
Sorry, how many?
typically you can get those for about
Oh, yeah,
10 to
there's
15. Typically you can get those for about 10 to $15,000 a year, and they'll come out every year and do the required inspections, any tweaks or anything like that. But they'll also do repairs if something comes up. So it's kind of like insurance, but it would probably save you money in the long run.
okay. Yeah, thank you, Tim. That's really good information. Thank you.
Yeah. And Joe's right that the elevators get expensive quick. Quick. We looked
Yeah.
at one property, it was like $100,000.
Yeah.
Grady, you said you were going to be nice though, so.
Yeah, I promise to be nice. My assessment is like elevators. You said you think there are two. You said cash on cash between 7 and 9%. Those are big numbers. I think what you ought to do is take your best shot and go, this is what we expect.
Okay.
And if somebody has a question, then you iterate off of that expectation. Like, I think we're going to have, we're going to have 8%. And then somebody challenges that. You go, well, here are the compounding factors. We could be down at 7 because of this. We could be up to 9 because of that. But you want to be certain what you think that cash on cash is going to be.
Yes, sir. I agree, Grady, 100%. And I've ran numbers. Like the biggest thing to me is my numbers is like really, really something I work on. And I've ran them and ran them and ran them. And I'm like, this is something that can be so cool for the investors because I think I'm like 99% sure that that's what we can give them.
Well,
all the numbers.
and I guess my point is, if I were you, I would
Yes.
lay out my expectation of
Okay.
all those things. You're going, well, we could do this and we could do that and we could do that. Well, we are going to do this, and this is going to be the result.
Of that.
Does that
Gotcha.
make sense?
100%. Yes,
Yeah.
sir.
So now you're telling people, hey, we're going to go get you 9%. Now, if they challenge that, you go, well, this could happen and this could happen, so that could fall down. But I think you want to take your best shot and go, this is what we're going to get for you.
Yes, sir. Yes, sir. Yeah, I'm excited about it. Yes, sir. I will
I
go.
can tell that it's good.
Yeah, the excitement it comes out. Like you're definitely excited. I think if you can kind of pull it all together, put it in a deck, when you talk to it, we can see what you're talking about. I pulled up your underwriting here.
Okay.
So have you submitted an LOI? Like where are you in the process?
We did. We submitted the LOI. We're getting our KP and our debt quote on Monday, and that's what they wanted to be able to move forward. So they wanted our lender, our investors, and our KP and our debt quote. So we got the KP and the debt quote on Monday. We got our lender. The only thing our lender from the bank. The only thing we need now is investors. So yeah.
So what's
close.
your offer? Yeah, what was your offer price?
18 million.
18. Okay.
Yes,
Because you have 19 on this underwriting, so you did it at 18.
Yes, sir. So we only need 5.4 from the investors, but talking to our coach, he said to go ahead and put an extra 1.1 on top of that for
closing costs, acquisition fees, capital.
Yeah. Right. So that's the reason why it's 1.1 above what the actual number is for the closing.
So your total all-in price is 19.
That's correct.
Okay.
No, it's 18. So
we need
91.
60.
Yeah.
A lot of those costs would be on the equity side, the CapEx and the closing costs.
Yes, that's exactly right. Yep, right there. Yep. The CapEx, like I said, I think it'll pay for itself once we get rid of the HOA, or even on the actual income that we got. I can say it would cost $500,000 to fix all these units. I don't think so. I think it would be, that's a good number for us to stat. So I don't, shoot myself in the foot, but I believe we can do it all under for half that.
And that's what you should talk to, like Grady was saying, like just say, hey, this is what we can do turn the units at. Like be very specific and like this is it. All right, I can send you like a deck you could potentially use.
I would love that. Yes, sir.
We can talk about, if you have questions, we can walk through it, stuff like that. Joe's got another question. Go.
Yeah, I got another question. Can you tell us more about the HOA situation? What's it going to take to unwind the HOA?
So the HOA is consisted of the total units in the whole entire building is 240. There's 36 other units inside in that will be bought out at later times. They're not selling or anything like that. They're the ones that control the HOA. So once we acquire the 204 units, we completely control the HOA. We have the seats, we have everything. So we would be the board of the HOA. Once we're the board of the HOA, there is a clause in the HOA to where we can diminish the HOA, get rid of it completely. And that would be the money. That money is still sitting there for all the dues paid. That would be the money that we would use for the CapEx right off the bat.
You need to be aware, though, there still can be legal challenges to that, even if you control it. So just be aware. I'd talk to an attorney about that's got an expertise on that, because there could be a little more difficult depending on the demeanor of the people in the HOA.
Yep, we have an attorney. We've been dealing with that. Yep.
And so is this a like a condominium building where people own each individual unit, or is it being rented out right now? What's the situation there?
170 are renters, and then the extra 34 are the ones that own the 26, 6, and 4, I believe it is. So we buy those out as soon as we purchase property for the 18, and then the other 36 is just their own separate entity. They're not even. They want to be bought out as well, but they want the deal to go through, and then we'll probably eventually buy them out to be able to acquire the whole 240, and then that would actually make everything go up. But I didn't want to get into that because we're buying 204. We're not buying
Yeah.
yet.
I don't know. Yeah, I mean, I've dealt, so I'm based out of Canada and I do invest in the US, and I've dealt with that a little bit before. And my preference has always been to unwind the condo corporation or the HOA or whatever it's called. So that's something, yeah, it might be a red flag for some investors. And it's something I definitely, as I think it was Tim that just said it, look into that a little bit more, get legal counsel on that just to make sure that everything is above board.
Yes, sir. And the legal counsel that we have spoke to, they're out of Raleigh also, and they say within 3 months they would be able to go ahead and get rid of all that. The HOA, because we have the seats, we have the whole house.
Yeah, yeah. I mean, it could be a huge value add, or it could really throw a wrench in your strategy. And the last thing I'd want to see on an opportunity, especially if you think it's so good, is for things to start going sideways, right?
Right. Yeah. And even if it stays the HOA, I've thought about that too. From what legal standpoint, we've been told different. But even if it stayed that, we still have the 204 units, and we still control all of that. The 36 that the HOA part, they have no rights or anything to any of the extra income. It all goes to the 204. But like I said, yeah, we'll definitely be in contact with our attorneys 100% throughout the whole process, and I think we're looking really good from what we've talked about so far with them.
And let me guess, your KP is Matt.
Yes.
Yes. Yeah.
And Matt, all the deals tonight are Matt's.
Yes. Yeah, we got
Yes.
Matt. I don't say his name, but yeah,
Matt
we're doing that
Tefke.
one.
Yep.
So
I'll make you the same offer I did the other group if you want to meet. And I have a few concerns on some stuff. I did a quick underwriting on it, so there's some things that are standing out to me, but we can go over them if you want. If you want to take advantage of it, you don't have to. It's up to you.
absolutely. No, the knowledge is power. So anything that you guys got that could help us, even if we don't close this deal, which would break my heart, but whatever. It's our first deal. I mean, it happens. But anything that you guys got that could help us, we're nonstop on this day in and out. Plus our W-2 jobs. We get home, we're just nonstop. So just please let us know anything. And if you guys know any investors or anything, please let us know. We're all open to everything.
Take my number down and get a hold of me if you want to.
Yes, sir. What's your? I'm sorry.
It's in my picture there.
Right there. It's right on his picture. Yeah.
Oh, okay. It's 573-225-6889. Tim, I really do appreciate it, and I appreciate all you guys. Thank you for the time, and look forward to doing this over and over again. We're eager to keep this going for a while.
Absolutely. Great job. Loved it. I love the passion. So you keep that up. And I think if you hone in some of the pitch checks and work with Tim on the numbers, you might have a good deal there.
Thank you, sir. I appreciate you so much, Jason. Thank you.
You're welcome. All right, Mary, you are up next. Uh-oh.
Mary, you're muted. Oh, there you go.
I'm getting myself unmuted. You know, when you're on the computer, you got to wiggle the mouse to find everything to go. And I am going to share. So how would you like me to do it, right? Because I'm really
however you want.
Yeah. Okay, so I'm pitching it as raising capital.
Yep.
So I'll introduce myself just so that you guys kind of have an idea, because if I'm going into a deal with somebody, I like to know who I'm dealing with. I'm the crazy lady down the block. No, I'm only kidding. So I'm Mary McGinty. I live in San Francisco, California, and I've been investing since 2017. I have my own portfolio, and I'm on a mission to retire using real estate. About 2 years is my business plan. I've been in the medical field for over 25 years. I have 2 boys. I'm a single mom, and I'm doing it. I have the drive to want, and I think that's what takes us to where we want to go. I'm in many mentorships. I'm in one that is called RPM, Raising Private Money, and I think that is the thing that most people don't have. We go into even smaller deals, and we find the deals, but we don't have the money. and you run out of your own money fast. So I was in that. I'm in Pace Morbies, which I'm sure everyone is aware of. I'm in grants. And then I've met people along the way. So, you can't be in the same groups and trying to pitch your deals to all the same people because everybody's doing the same thing. So one of the things I say is put yourself out there and find other platforms. There's a lot of free ones that I've met along the way. So I'm using this to pitch on Monday. The guy wants me to do an education. So my pitch is how to use a pitch deck, how to create it, why you use it, and how to raise money from it. But I'm really pitching my deal. So I'm kind of using it as a double fold. Go ahead.
No, I was just gonna say. I said I know Mary. Mary's awesome. So just
Okay.
give you a
I'm
heads up on that.
I'm a little bold just because I feel like we have to be.
You are.
If you shy away, you're never going to get anywhere. I do my little videos and put them out. I use Canva. And then to me, that's kind of fun, but it also makes you stand out. And that's kind of what you have to do. So I will get into my deal. So I am actually not the owner. I am raising capital for 3 owners on this deal. I'm an equity partner. I am also an investor. And I noticed when
Did we lose Mary or is it me?
I think we lost her.
She's gone.
We lost her.
this right here is a laundry facility.
Hey, Mary,
Yes.
we lost you for, I don't know, 30 seconds.
What did you hear last?
We got laundry. Yeah, we got you're about to tell us you were an investor, equity partner, and then you went into laundry.
Okay. Friday night's not my laundry night. Okay, I'm raising capital for somebody else, right, that owns the deal. There's 3 companies that are doing this, 3 gentlemen. I'm an equity partner for raising capital, but I am also in the deal. And one thing I've noticed, and I do it myself, when you're pitching a deal, the first thing most of the investors say, are you in the deal? They want to make sure that you believe in the deal the same way. If you're pitching it, are you in it? So I am also an investor in the deal. So I'll go over it. It's 179 units and it's a mixed park. It is self-storage over here. There's 126. About 50% of those are filled. And then the RV park is over here, and that is 100% filled. This is the laundry facility. This is a kids park. This is a gazebo to get married in, and I'm kidding. That is actually barbecue pits. You know what? When I first opened it, and they didn't tell me what it is, so I made up my own thing what it was. But you got to have fun in it, otherwise it's kind of boring. So there's barbecue pits inside of there. This back part over here is also owned, and their intention is to put more RV pads in there. They're looking at doing about 25.
Mary, can I ask something on the left side? Are those storage containers?
These over here are storage, yes.
On the left side?
No, those are RV parks. That's the covered RV parks. This side, right?
Correct. Well, you've got I see the covered RVs.
Let me see if I can, here they are. Do you see it?
Okay, got it.
Is that better?
Yeah. Okay.
So there's 2 options.
I can see why you say that, because those look similar to that.
Yeah. And there's 2 options, basically. It looks like they can go under just a roof or they can be completely boxed, right?
Correct. They have trailer parking as well. It's actually, it has a lot on here for it. So let me go to the next one. So something I like about this, so there's a couple things I personally like. I love the short-term 3 to 5 hold. Life gets in the way of all of us. 5 to 10, I'm in those type of deals, but I just like the 3 to 5. This is just 600,000 is what we're looking for. We've already raised 300. And what's nice when you have a smaller amount, you have less people, so you get more money as the investor. I'm in a deal with 52 or 55 people. I'm not getting as much. Where something like this, I'm going to get more. It's an ownership of 20%. And the cash flow split is 80-20. 80 is to the investors and 20 is to the owners. Monthly distributions. I like monthly. I don't like quarterly. So that is another thing that I like. And then monthly reporting. Equity multiplier 2.26. So a good way for me to look at this is if I put in 100,000, I'm going to double that plus the 0.26. So if I put 100, I'm looking at maybe 215, 216 in return 3 to 5 years. And then cash on cash is almost 12%. That's actually a really good number, according to me. 1 year investor, 1 year is cash flow. So day one at cash flow, soon as someone does invest, first month you will receive a distribution. So here are some highlights. As I said, it's 179 RV park and self-storage with some other items that are there. Purchase price is $2.5 million. In-house management. Day one cash flow, which I already said. Cap rate is 8%. And there's room for expansion. That's why I showed the first picture, so you get a better picture as I'm doing this. You have an idea of what I'm talking about. Water, city water and city sewage. Investor, as I said, cash on cash is almost 12%. And the RV park is 100% occupied.
Yeah.
Why this deal? So buying it below replacement costs. So this is a brand new build. It is built in 2025, and the builder has to sell it. They can't get a bridge loan in order to pay it, so they're going to have to go below value of what they really should be selling it for. No construction risk. Operation upside. Developer was the first time building a park. And there are only 2 parks covered in Abilene market. Operator has to sell, as I said earlier, and that is because they cannot refinance. I don't know if anybody's dealt with brand new builds. They're usually pushed for time. I bought a duplex that was brand new, and they built one right after another, and they were willing to sell less just because they don't want to keep paying that expensive bill because they don't have money coming in. Fixed debt, it's 80% LTV. LTV is loan to value. Just for people that don't know, I like to explain because I want to understand stuff myself. 6% interest and then 30%, a 30-year AMM with a 5-year term. So here is Texas for people that don't know. Obviously, I don't live in Texas. I'm in my sunny California. Here's Abilene, Texas, and here is Fort Worth, Dallas. So it is west of it. And here are some of the things that are growth. They have a huge growth right now with an AI Stargate data center. A lot of things are moving to Texas. A lot of stuff out of California is moving to Texas, even out of New York. A lot other than Mary. So they have a lot of growth going on there. Something that the data center that's going to bring, it's all AI. So that is where our world is going. You have an Air Force base that is there, and you have a affordable housing shortage, something I wouldn't have thought of just because I don't really have RV parks here where I'm at. I would never have thought of this being like a lived-in place with helping with affordable housing. So here is the storage units. And again, they're about 50% occupied. Refinance and hold the property for long-term cash flow. Disposition of self-storage asset while retaining the RV park. So if they want, they can split it. And here it is, single asset disposition as a standalone sale. And the portfolio sale in 5 years with two of the capital owners in their portfolio, which would include 5 parks within 2.5 hours of this facility. Brought this up again just so everybody could see. We're still looking for 300,000. Minimum is 100. Again, we're trying to keep it with the less people, and this is actually a 506B and C. That's why I'm able to promote and put my fun videos out there. Why RV parks? So they're stable in demand, long-term tenants, lower operation and maintenance. I don't know if anybody here has their own property and someone moves out, you have a lot of money to pay for someone that has kids that draw all over the walls. You have to paint, fix doors, replace window screens, all of that. This doesn't come with that. Fixing a toilet, this doesn't have that, right? You bring your RV there and your maintenance is you of what you bring. Fragmented ownership creates opportunity. Stable demand for long-term tenants, clear upside through operations and marketing. Something they're going to do, they're going to start marketing it. They're going to create a Facebook page and a website for it. I was looking at a property here in California. It was beautiful, brand new build. And they already had the website. It was actually very attractive to me looking at it. And I'm like, they've already done all of that. That takes a lot of time and money to put that together. So here is the sponsors. 3 companies. They collectively own and operate a 9-figure real estate portfolio across the Southeast and currently own 8 RV parks in the region, including 5 parks within 2.5 miles. They have over 20 years of experience between all 3 of them. Combined experience with more than 600 pads currently operated. The sponsor groups brings meaningful operation depth, local market knowledge, and a proven ability to execute. And this over here is just talking about the in-house maintenance on their own. It brings your costs down. If you have somebody else managing your property, your tenants, if you can't fix something fast enough, you lose your tenants. But if it's in-house, I think it's your baby. You're paying more attention to it and you're watching how you spend what you have to do. So that is to me, one of the positive things. Creating economic scale through centralized operations, tighter cost control, faster response times, hands-on asset oversight, and the firm is actively pursuing a growth strategy to acquire 1,500 additional pads over the next 3 years, positioning the platform for continued scalable growth. The one person that is in this said that anybody that comes in and kind of wants to learn and comes in as one of the investors, they're willing to allow anybody that goes in to be a part of their property management phone calls, so you can learn the process and the operations. I don't have a slide that says questions, but questions.
Questions. So is this you only have 300,000 to raise. How much time do you have left?
May 14th.
So
I have 14 days.
Yep.
Right, as minus today at 13. And let me tell you, go ahead.
Yeah, is it a joint venture or is it?
Yes, it is.
It's a joint venture. Okay.
Yes. So I have a video. I have some kind of video going every day. I did one yesterday. I'm doing this today. So thank you for the opportunity. It also gives me a chance to kind of, grow myself by doing it, right? And helping others. Tomorrow I do the same, and then I have a private one on Sunday.
This is one great job.
Thank you.
Very good. This is a very good investment opportunity. Grady, I think you have a question.
All right, let's hear it, Grady. You got to be nice, Grady. I don't know you, but somebody
That's the
else said
one
it. So
thing.
I'm repeating I'm repeating
Jason made
something.
me say I'd be nice. All right. So here's what I want to start with.
Sure.
This is my part of the world, and it
All
obviously
right.
is not yours. Okay.
Correct.
So,
okay, tell me what do you mean by your part of the world? Are you
right.
in Texas or are you storage? It's blurry.
No, I'm in Texas.
Can you pull
And
it
I'm a
back?
longtime Texas person, and unfortunately, you can't see my phone. But up at the top, well, let me start here. Your address, 5194 US 84. It's really on US 83 because the road splits and 84 goes off to the east, and this is 83 is the west hand branch, which is where Tuscola is.
Okay.
And then if you could see when you pull it up on the map, I was like, I don't recognize this around Abilene. Well, it's because it's 45 minutes south of Abilene in the middle of nowhere.
But isn't that where you want these?
Well, I'm just pointing out facts.
That is okay.
So,
no, that's okay.
So Abilene is about 30 minutes across.
If you put your phone
I wish you
in
could
front
see
of the
that,
middle,
but
I could see.
so and then about 40 minutes south is the split between US 83 and US 84, and then you go over here, and that's where this place is. I mean, it looks great, but and then the other thing I wanted to say is when you mentioned their total assets in the area the first time, you said within 2.5 hours. And then
Okay.
in the wrap up, you said 2.5 miles. And I can guarantee you there's not any more storage and RV parks within 2.5 miles of this one.
So 2 hours.
Yeah.
2 hour radius is that
Yeah,
one. Hold on. Okay.
So
No,
and
I think
then
it's written. I
It could
think
be
it's
me
written
saying
right.
wrong. Hold on.
I think you just said it wrong. I think you
I
just
think
said
I
it
said
wrong.
it wrong.
yeah, I just point that out because you need
No,
to
that's
be
okay.
aware of
Thank
that.
you. You know, I'm just going at it and and what I don't want to do is sit and read it. So I'm trying to not read the whole thing because then that's boring.
Well,
to me.
and the Stargate AI data center has to be an hour from this.
Okay.
So that sense of space is one of the reasons, from your presentation, I would jump all over this. But knowing what I know from being in Texas, this is a long way from Abilene.
Okay.
So, and I'm not trying to poo-poo, it is not a good deal. I just want to make sure that you understand space-wise. When I drive in Texas, I go, well, I'm going to go down to Dallas tonight for the meetup, our RIA meetup. And people go, well, how far is that? Well, it's just down the road. It's only 2 hours, right? So, in that scheme of things, if you had a reason to drive out there, that would be good. But this facility is just really remote. So
Okay.
that's something I would want you to, as you keep trying to pitch this, it's something you should know.
Thank you, Grady.
You're welcome. But all your things here, Stargate Data Center, Dice Air Force Base, affordable housing shortage, yeah, those are all true. So it's just a matter of awareness about how far those things are apart.
Sure. Thank you.
You're welcome.
Sid, my cousin lives in Austin. 2 hours is like 15 minutes for the rest of us.
My cousin lives in Divine, which is he was in the military and then stayed. And he told me we drive all the time. Everything long drives.
Well, I had a friend who was in Houston last week for a meeting, and she said I was late for the meeting because I didn't realize Houston to Houston was an hour and a half.
It's a big state.
Mary, I've got a quick question. This is Lee.
Go for it.
So good to see you. So the sponsors, they saw something really compelling about this deal because they have 8 other RV parks, right?
Mm-hmm.
So do you know, and I may have missed this because I had to jump off and jump back on, why are the sellers selling this? It's a beautiful facility, and I'm just kind of curious if I missed that or not. Do you know why the sellers are selling to begin with?
Yeah, so it's actually the builder. It was built in 2025, So the operator has to sell. They cannot refinance out of the bridge debt.
So it's a distressed seller. So,
Yes. Builder. Yes.
or builder. Yep.
Very nice. I've seen this property. I mean, not firsthand, but this is a real find. So I don't doubt you guys are going to raise the cash pretty quickly if it's just 300K left. So great pitch deck.
Well, thank you.
Any other questions? Oh, awesome. Well, great job. Great deal. Good feedback. And any questions from you, Mary?
No. No, I don't have any questions.
Does anybody have like contact information for you to reach out to you? You should probably put that in maybe the chat or something.
I will put it in the chat. I'm gonna find the chat.
And then Tyler, you have a question.
I do. I just want to say thanks for having me on, Jason, and everybody else. But what kind of debt are you guys getting on this, the RV park slash storage slash everything? I'm just curious on the debt standpoint.
Hold on, I got it on here. Wait, hold on. Am I still okay? I want to make sure I put it on mute. It's a fixed debt, 80% LTV.
So
and
yeah, but what are the
purchased for 2.5? Say it again.
just like, so what are the terms? Sorry. So you got 80% LTV.
6.4 interest and a 30-year AMM and a 5-year
Okay,
term.
6.4. Awesome. Thank you for that. I must have missed it because I did hear I do think that you went over that. So thanks for answering that. And also it's nice to see you, Mary. I don't know if you remember, but we've I feel like, oh, can you not hear me?
No, we can hear you. I can hear you.
Okay.
Yep.
Yeah, just good to see everybody. Anyways, my phone is almost down, almost done for the evening. Just in case that happens before I get back home, I just wanted to say, everyone have a wonderful weekend.
You guys lost me. Sorry. I think it was my internet.
And we lost Tyler too. So.
Oh, then it wasn't my internet.
No, it was Tyler. You're good. You're good. All right. Thank you everybody for joining. Again, great to hear all of these presentations. Look, first time you do it, last time you do it. It's always nerve-wracking sometimes, and I appreciate all of you for taking the courage to do it and jump on it. And thank you for that. I think it was helpful for other people who got to listen to it as well. We'll reach out to some folks. Reach out to Mary if you're interested in her deal. She only needs 300K. Should be a piece of cake. I think everybody on here has way over $1 million each that they want to give to you. So piece of cake, right?
I guess I'm in the wrong room.
Yeah. Tim gave me his money.
It grows on trees, Tim.
That's right. That's right. Well, thank you all for spending your Friday night here. We appreciate this. We send out these recordings, so if you want to re-listen to it, or if you had a question about something, just reach out to one of us and we can get a hold of the folks that pitched as well. So thank you all for joining. Hope you have a great weekend, and we will see you next Friday.
Thank you.
Thank you.
Thank you, folks.
Thank you.
Mhm.